With a surge in sales during the pandemic, new markets coming online throughout the US, and greater public acceptance of adult use of medical cannabis, the cannabis industry feels poised to enter the mainstream. With another wave of expansion and consolidation on the way, many operators are wondering whether now is the right time to consider taking your company public. In this video, we will go over the reasons for taking your cannabis business public, explore the advantages and disadvantages, and consider the different options you can take. Before we dive in, be sure to like, share, and turn on notifications for more guidance and best practices for building a leading cannabis operation. If you're considering going public, you're likely the founder, CEO, or financial leader of a sophisticated cannabis business with ambitious plans. If you're at the stage where you're thinking about this seriously, then your products and services are best in class. You've carved out a profitable niche in the industry, and you're barely keeping up with customer demand, and you have clear-cut and ambitious plans for the future. The last piece of the puzzle is a major capital infusion that will help you bring all of your plans to life. A key consideration for going public is making sure that you have a well-developed use case for the capital you'll raise. Ultimately, there are as many reasons to go public as there are companies who undertake this transformative transaction. Some common reasons include to enter new markets or states, to vertically integrate, launch new products, acquire licenses or operations, invest in research and development, and pay down existing debts to boost financial health. Once you've got your market advantage and a clear growth plan in place, it is time to consider the good and bad of going public. Before undertaking this complicated and cost-intensive transaction, you should weigh the advantages and disadvantages of operating as a public company. Advantages to operating as a public company include access to capital. Naturally, this is the primary reason to go public. In your initial public offering, you'll get a serious capital infusion, but it doesn't end there. Once public, you can use the markets to raise additional capital at a later date, normally at a higher valuation than you would seeking investments as a private company. Boost to market awareness. Going public can be a highly publicized event, raising awareness and earning headlines that introduce products and services to new markets. Currently, the list of public cannabis companies is quite short and includes many industry leaders. A successful IPO automatically places you in this upper tier. But this isn't a magic trick. You'll need the financial and operational strength to back up this elevated status. Leverage for talent acquisition. The hiring market in cannabis is very competitive, and going public can make the company more appealing to future hires. As you bring on C-suite executives and building a leading industry team, you'll be able to offer valuable equity ownership options that act as compelling motivational and retention tools. So if you're thinking about offering ownership shares to your team, we've got a video breaking down just how to do it. Securities that can be used in M&A deals. If part of your go public plan includes acquiring companies or licenses, shares of your company can be used as compensation and may be seen as more valuable than cash. And now for the other side, the disadvantages of going public. Initial and ongoing operational costs. The process of going public itself can be very cost intensive. First, you need to clean up your operations and financial state so you're desirable to potential investors and you're absolutely ready to meet regulatory and reporting requirements. Then, going public itself has built-in costs. You have to build a top-notch pitch deck, launch a successful roadshow, and prepare all your financial documentation, including a public quality audit. These costs add up fast, so it's advised that you have a healthy amount of cash on hand before starting the transaction. Once you've gone public, meeting regulatory and reporting demands also has built-in costs that you'll have to plan and budget for. Dilution of equity and control. If you're a founder, you'll have to plan to give up a serious amount of control of your company. By selling ownership stakes to the public, existing owners and investors may be diluted depending on future valuations and growth. When operating as a public company, you'll also have to answer to a board of directors and, to a lesser extent, the community of investors and shareholders. Heightened public scrutiny. This one goes down as both an advantage and a disadvantage. While greater market visibility can help, the flip side is that public disclosure rules require shining a light on many operational and financial details. Plus, business decisions will be reviewed and assessed by the public. That means media, blogs, and the kingmakers on Reddit will have a lot to say about nearly every move your company makes. And if they don't share your vision, you'll certainly hear about it. Navigating regulatory oversight. If you're nervous at all about public opinion turning against you, you'll have to prepare for managing regulatory approval. Operating as a public company comes with a wide range of regulatory and reporting demands that you'll need a dedicated team to help you manage. And if you do something to upset regulators, they'll have the power to shut the entire thing down with some nasty legal outcomes being the final result. There are a number of very large and very successful companies that remain private to this day, partially because the risks of the disadvantages we've listed here are too much to manage. But nearly every household tech or consumer brand you can think of, Apple, Google, Coca-Cola, just to name a few, successfully operate as public companies and are worth billions. If you're a plant-touching cannabis company with operations in the US, your options are quite limited. Within the US, you may consider an over-the-counter OTC or off-exchange transaction, but these are unregulated, quite risky, and limited in scope. Until federal laws change, you're barred from listing on any of the SEC managed exchanges, NASDAQ, NYSE, etc. Instead, you'll likely look north to Canada. The federal legality of cannabis in Canada, plus a welcoming regulatory, financial, and investment environment, has made the nation home to a number of large cannabis enterprises. This has led to growth fueled by the ability to access capital via public listings. The two most active exchanges, the Toronto Stock Exchange and the TSX Venture Exchange, are home to a number of large Canadian cannabis companies. But similar to their peers in the US, they impose restrictions on listing companies that have plant-touching US operations. That elevates the Canadian Securities Exchange, or CSE, as the best option for most cannabis companies. The CSE is an alternative exchange focused on microcap and emerging companies. The CSE calls itself a modern and efficient alternative for companies looking to access the Canadian public capital markets. As a result, the CSE offers simplified reporting requirements that lower the barriers to listing. Perhaps most importantly, the CSE has taken a progressive approach to the cannabis industry and does not block companies with plant-touching U.S. cannabis operations. Today, well-known U.S. cannabis companies listing on the CSE include Curaleaf, Columbia Care, Cresco Labs, Gage, Harborside, Lowell Farms, Trulieve, and that's just to name a few. So if you're serious about an IPO, the CSE is most likely your destination. These are just a few of the considerations a cannabis company must seriously weigh and balance before going public. Benefits can be truly incredible, but the risks are not without consideration. If you're planning a cannabis go public transaction, the experts at GreenGrowth CPAs can be your trusted guide. We're the only cannabis-focused accounting firm to take a company public in Canada, and we know the ins and outs of the marketplace. So if you'd like to talk your options through, just schedule a consultation with us at greengrowthcpas.com or call us at 1-800-674-9050. Thank you so much for your time. We hope this information has been helpful. If you have any questions or want more information, please leave us a comment below. And be sure to like this video and give us a follow to learn more about the cannabis industry.